Hello everyone. In this video, we will talk with you about what mistakes beginners often make when trading on futures, how to avoid them, how, respectively, not to get flooded, not to lose all your balance. Your entire balance. First of all, let's find out how to get to the futures section of the trading platform. Perhaps you are a beginner and have never traded in futures. Go to the derivatives section, choose the open-ended USDT and a pair to it, let's say Bitcoin, as the most popular and the most widespread. Accordingly, here we have the opportunity to make several types of transactions. Buying it long or selling it short. Accordingly, to long, we buy Bitcoin, or rather Bitcoin, yes, a futures contract. We conclude, wait for the price to rise, and when the Bitcoin price rises, we get money. If we trade short, we get money when the price falls, if we short. So, there are three types of orders to make transactions. This is a limit order, that is, we put the amount we want to buy and the price. That is, let's say, I can write that I want to buy 100 USDT at the price of 487, and the deal will be made at this price. That is, let's say I bought in long. Now we see the price is a little bit higher already, yes, 94. When it falls to these values, the transaction will be completed either for the entire volume or slowly. Let's say 5 or 6 trades will close it all. A good bonus, not a bonus. Or rather, yes. How is this option better than making a market deal, where we buy instantly at the market price? Because in this way, we create a maker deal, not a taker. We add our order to the book, this order book. And that way, the community will pay less. But if you trade small amounts of money, it is better to use the market, that is a market deal. Because it will be done instantly, this percentage will not be very significant. And often people who trade small amounts, yes, they make a lot of deals in the sense that, let's say if you put some price there, and especially if it is not Bitcoin, but some more or less volatile coin, altcoin of some kind, then in this case you can wait a long time for a deal. And in general, if your earnings are reduced to the fact that you want to make a lot of deals in futures trading, it is better to always use market orders. If it is some more fundamental things, buy Bitcoin, sell it 10% more expensive, then of course you should use limit trade. And this is the first advice in principle. Yes, try to use limit trade in big trades because will be more profitable for you. And I also advise you, if you trade a large number of coins, let's say there is not 1 or 2 of them, or Bitcoin, or Ethereum, let's say some, then use not cross margin. If you have altcoins, then use isolated margin, so that if some coin is volatile, very much deviates from the exchange rate, you will not lose your entire balance. You will not catch liquidation, which we would not like. So, a very common mistake of beginners is to use huge leverage. Their eyes light up, say, I can put leverage, for example, 100. Yes, and buying Bitcoin, it will grow by 2 or 3%, and I will get 300%. Because leverage is how multiplayer works. In fact, instead of 2% of profit, you will get 200% of profit. But in case Bitcoin deviates by 2%, for example, down, you will just lose your money, the whole amount. So, in no case. I would like to say that if you are a beginner, don't use high leverage. You should never use it at all. Always. I don't know. I personally use the maximum 5th leverage, and this coin is some kind of, super fundamental. I traded with the 5th leverage in futures only on XRP. It's basically a coin that has been around for a very, very long time, and it has literally minimal deviation in price. With the same Bitcoin, I never put more than 3, and in principle, I advise you to use one. To put, that is, without leverage at all. In this case, you will also face, yes, margin call and liquidation, but this change must be 100% even. That is, you must buy there, let's say. If you buy in long Bitcoin at this price, it has to drop 100%. It has to become zero worth, so you lose all your money from that amount. And in case you sell offshore, it has to become 100% more expensive. That is $82,000 it has to become, so you lose your money. It's pretty safe. Because, well, at least Bitcoin will reach these values dramatically. I don't believe in it. Even though, let's say, we are expecting another halving soon, I don't think it will. At least a quick there. 2 or 3 candles growth up to $80,000. It will happen gradually. Next, a very important point. Let me make a transaction on the limit, just to make it clearer. Let's say I'm buying long, the deal is done. To control yourself, you don't need to refresh every 10 minutes. Look, and there, a small rise and a small fall, even worse. Yes, you saw that it there, sharply collapsed. There by $700. You immediately sell it. That's it. Get out. No, you can't do that. Very often people follow their emotions. It's the most common mistake, perhaps. When just, there, something went wrong. He's still, the person is sitting, he put the mouse, there, here, on the button to close on the market, and just something went wrong. Minus 0.1%. Bam bam. 100% close. So he loses 1%. Well, not 1%, but 0.1%. Plus, as we discussed a little bit earlier, he loses money for orders, for creating them. And okay, when I made a deal for 100 USDT, it's not really noticeable. But if it's a deal for 1,000 USDT or 10,000 USDT, yes, it already. That can cause some problems. Here. Accordingly, therefore, to avoid this, it is such a psychological thing, I advise you to always immediately put a track profit stop loss. That is, when you have a cold head, not at the moment when you already have a deal. Yes, there is, and you, there, risk to lose something, you analyze. You analyze where the Bitcoin is going to go. Up, down, what do you think? For example, I think it's going to go up a little bit soon. So, as I would do, I would check the take profit stop loss box, immediately put in all the values. I use percentages most of the time, and I recommend you to do the same. That is, let's say it grows by 5%. Oops, I bet, and my profit in case I bet USDT will be $5. Well, of course, there. The amount is usually larger in such deals. Or if you trade on USDT, you can take a small leverage. Let's me. Third. Maximum third. Even though I still trade with a small amount of money, yes, we never go above the third leverage. That's the most important thing. I'll say it again. Please don't forget about it. We check the box, we put 5% of growth. That's it. And that's how I can open the trade. And when it reaches these values, I will get my profit. But again, in case you are afraid of a sudden collapse of some kind, usually it is not Bitcoin, yes, but some new coin, altcoin, which is pulling it up and down like this, and there is a strong possibility that it will fall a lot. It is always better to be insured. It is called risk management. You always have to realize that you don't want to lose your entire balance. There's an amount with a loss that you're willing to put up with. You should be willing to put up with that. Yeah, and it shouldn't cause you a bunch of negativity. Well, understandably, you're going to be uncomfortable. Yeah, you shouldn't fall into the tilt of losing everything, so I would put it there. I don't know. Let's say for Bitcoin, I wouldn't do that. I probably wouldn't put a stop loss at all, because I realize that Bitcoin will grow sooner or later, especially if you have a single leverage. It's a safe trade. In the case of the third, yes, there is a small risk, but accordingly, in Bitcoin, I do not think that there will be a sharp fall. You just simply following the market, you just understand that there is bad news, some negative background, Bitcoin is falling. It is necessary to get out of the deal. So beforehand, just put minus 20%. Confirm, then yell buy long done. Thus, it is better not to enter this particular deal at all. You can follow it in your portfolio or something else. Well, just in general on the news. Yes, and do not enter here like mad. Do not look and just wait until you close the deal. It will either grow to these values, yes, and you will close it in the plus, or it will fall, and you will close it in the minus. You'll think, okay, it's okay, it happens, I made a mistake, I miscalculated somewhere, or just bad luck because, it happens that the news background is great, Bitcoin should go up, and it goes down. Because, for example, I had a hunch that Bitcoin ETF was accepted just last week, and the price should have, in my understanding, grown quite seriously. It remained stable at first. Ethereum grew at all that they took Bitcoin ETF. Yeah, and it stayed at the same level at first, and then it went down to $4,000 for some reason. Nobody is immune to this kind of thing, so keep in mind, it's better to always set these values too. In general, in fact, these are the three most important mistakes. It is to give in to panic on psychology, not to put yourself a stop loss, yes, not to accept a small loss and go to the end, to lose everything in case you already realize, yes, that the situation is deplorable. It's always better to realize it cold-bloodedly, and if you don't have a stop loss, just go in and close the deal yourself. Or if you do, well, just wait until it falls to it, and that's it. You can even not follow it. Well, and respectively, large leverage. These are the three most important rules. If you use them, you will be able to trade relatively safely on futures, of course. If some fundamental coins there, Ethereum, Bitcoin, and so on, and get your income, and yes, go to some plus. Let's close this deal. These were the three main mistakes in futures for beginners. If you avoid them, everything will be fine. That's all. Thank you very much for watching. See you in new videos. Bye.